Good evening, traders. Welcome to a trade breakdown. I'm going to try to do more of these more often. So I'm going to see how I'm able to do a few more of them um, as I get the opportunity and I get the chance. So tonight we're going to have a look at a trade on the SP 500. So as you all know, Forex has been difficult, especially my pair GU has been difficult. Well, most of this week and last week, and actually basically just all of this past 2 months of everything that's been happening, and has been quite sad. So anyway, we're going to look at indices tonight. We're going to look at the S&P. I'm going to point your attention to a few things. So first of all, from the high time frame, the daily was not super clear for me. So yes, we did the trade up into this area of this previous day. We did trade up into something. I don't know if it's order block or what. It's the last down candle. Here's the last up candle before the down move. I'm not 100% sure, but all that I know is the price traded up into this area. And potentially we could see a reaction from this area. We can also see that we kind of have a swing point to the left of it where we have a high, a lower high to the left and lower high to the right. So that could be a swing point. So typically we wouldn't want to see price trade above that swing point, or it's more likely to trade in the direction of the swing point, meaning going lower, than it is to go above it. So just keeping that in mind. So there wasn't too much on the daily, but the 1 hour did give me some information. So we had this high to the left. It is relatively significant high because we had a massive push towards the downside after we created this high. And if you pay attention, this little high also swept liquidity to the left. So that's kind of what makes this a significant high to look at. A lot of imbalance as well. So we created a high on the Friday the 14th. This high did trade up into a little bit of this imbalance, but not completely. As you can see, we did trade up into it, so a relatively significant amount, but we didn't fill it completely. And we know that obviously there's liquidity resting above the previous daily high as well, so something to keep in mind. So when we see price trade above that high, trade lower, this is now when we can start gather some information for a trade by looking at price action. So what happened after we traded above that high? We broke down. Well, first we made another sweep of a high, then we broke down, we pulled back up, so we traded above that high, broke down, broke structure, the wicks traded below this low, we filled this gap, but then most importantly, we made a retracement, tried to make another push up, but we failed to make a higher high. We made a lower high, so this was our higher high. And then instead of making another higher high, we made a lower high. So we can just mark that out. We made a lower high compared to the high to the left. So that already gives us an indication the price is potentially going to start trending lower. So when we know the price, or have an indication the price is potentially going to trade lower, we can then look for objectives towards the downside. What do we see on the downside? Where could price potentially be trading to? So now we have a story in mind. So next thing I want to tell is that for indices, as we all know, we want to be trading them in New York session. So we want to start looking at indices from 230, this is GMT plus 2, to 330. Those are the two openings, two areas we want to see price start reacting from. And so on. Just a side note, I think like most of you guys, I've also watched the ICT 2022 mentorship. So a lot of the things will look familiar to what he teaches. So all credit to him where applicable. So yeah, so we see price then. So what I wanted to say is that I then don't look too much at what happens during London and New York session. So we have Asian session over here, and then we have London session trading lower. So I'm not paying too much attention to those areas. Yeah. So first of all, we note we have yesterday's low, and then I noted these two, well, these relative equal lows, really sitting nicely down there. And then also, if we talk about support and resistance, here's a lovely level of support, potentially we'll be able to trace it or pull it out, and you can see it being respected, resistance, broke through, support, there was a gap, so it's in that gap area. So it's an area of sensitivity that we could potentially be interested in. So that was then the extreme south side liquidity objective. So if we then look, just want to point out then the 30-minute. On the 30-minute, we had a zone right over here. We'll call that supply. So that's something to keep in mind. Why? Very simple. We swept a high and we broke structure. If you keep those things in mind combined with seeing imbalance, then you're golden if you only look for those zones. So we have a sweep of high and we have a structure break. So that gives a really strong validation to this zone. So price opens, it trades up into this little imbalance, and then we see the run lower, and then we create these relative equal lows, which in fact is just more liquidity for price to hunt later on. We run towards the upside, tap into that 30-minute block. Again, we make a small little sweep of buy side liquidity, and then we start breaking down. We have a breakdown, we have a pullback, and then we have this clean level right over there. On the lower time frames, you'll see we had a structure break on the 3 minutes, structure break below. There's our supply zone, and then the trade taken from there. Stop loss above, and then the first target is yesterday's low, the previous daily low, for a beautiful 4-hour, and the ultimate target was that sell side liquidity below the below the equal lows on the high time frame. So that was kind of it. That was the gist of it. So it's a few important things that about this trade was that we had a little bit of fake movement happening over here. So initially I thought that this run up into this area would be the move lower, and we traded lower. We just kind of swept that little zone or little equal lows right over there. We just traded below it, and then we had this move up. So I initially thought that this would be the move lower, but it failed to do that. Also there was no real structure break. There was a little wick below on the lower time frames probably, but there wasn't a real strong structure break towards the downside. So ultimately we see price go up, sweep that high, and then we see the trade going lower, creating a nice zone over there. Again, we had that little sweep, break of structure strongly with a full body close, another pullback into that 3-minute zone, and then the sell-off towards the downside. So a few things that we can note is that it is in our time frame or time window. So to say, it is in the New York session, and it also, we had a valid zone. We also had a strong structure break, and we also had imbalance or fair value gap. Pretty much the same thing. So we had tick boxes, we can tick them all off. We had the New York session, we had a valid zone, we had a strong structure break, and we had imbalance and a fair value gap. So then it's just by another thing we can add is high time frame reaction zone. That is important as well. So our high time frame 30-minute reaction zone. So it reacts off of that zone with a sweep of a previous high, which is good. Breakdown, structure break, and then ultimately trades nicely lower. So again, we can see that this side we had another little break imbalance. Look at this candle, just sweeping that little high, and then price coming to just tap it, actually fill the imbalance. and we see price react, potentially going lower. But that's kind of the trade idea and the breakdown behind it. Very simple, very plain, straightforward. Really great setup to look for. So guys, that's it for this trade. I hope you enjoyed it. Subscribe, like, and comment. It helps with the algo. And then thanks for staying if you've watched this far, and I'll see you next one. Bye.